Hi there, welcome to Neppy Invest. About a week ago, I did a buy now, pay later technical update. So I looked at all the charts of all the companies to see whether they're in uptrends, downtrends, whether there's any resistance, support lines, what price they are compared to those lines. So I did all that technical jazz. So if you do follow me, you know that I look at the technical side of companies, their charts, and I also look at the financial side of the company. So we get a lot of investors who look at one and don't look at the other. I look at both and take them both into consideration when I buy a company. So last week's video was on the technical update. Today I'm going to be looking at a financial update of all these companies, except one which didn't release a quarter one update. So most of these companies released a quarterly update at the end of October or towards the end of October. So I'm going to be looking at all those updates and then comparing those finances to the previous quarter and the previous year. Except Humm, which didn't release an update, but I'm going to look at their financial year 20 numbers and compare it to their financial year 19 numbers. So why or what is my history with buy now, pay later? I did this in the previous video, so if you want to get more detailed explanation of my history and the reasoning behind my indirect ownership, or the explanation behind my indirect ownership of Afterpay, you can look at my previous video. So I have directly owned Afterpay 3 times, and the most recent time I did sell out was simply because I have an indirect ownership in Afterpay through ClearPay. So Afterpay owns 90% of ClearPay, which is the UK buy now, pay later offering. And the other 10% of ClearPay is owned by ThinkSmart. And ThinkSmart is listed on the alternative investment market, or the AIM, on the London Stock Exchange. So how well Afterpay or ClearPay goes, ThinkSmart sort of follows the fortunes of Afterpay, I should say, or ClearPay. So because Afterpay's share price is going through the roof, so has ThinkSmart's share price. So I thought because I've got that indirect ownership, I shouldn't really have sort of direct ownership as well. Also, it's harder to sell out of the AIM ownership. Anyway, I've also day traded Zip. So I owned that for about 2 hours. Like I made about $100. I just wanted to see what day trading is like, but it's a lot more stress following the share price for like 2 hours straight. All the more power to you if you're able to do that sort of thing. And about 5 years ago, I owned Flexigrouo. That was before buy now, pay later became sort of a really big thing. They did have some offerings that were very similar to buy now, pay later that we see today, but they didn't really notice or know that that's the sort of thing that could really make their company grow. And finally, Flexigroup management realized they probably should rebrand the company to Humm. So they're going to rename the company to Humm and have a ticker code HUM, I think. So finally, they've gotten the idea that buy now, pay later offering in Flexigroup is going to be leading their growth moving forward. So before I get into the finances of the company, it's really good to look at the market cap of the buy now, pay later stock. So there are some inexperienced investors who don't realize that you have to look at the market cap to get the valuation of a company. So funny enough, I've come to the realization there are people out there, because they're very inexperienced, that just look at the share price of a company and think that's the value. But to get the value, you need to know the share price and the shares on issue, and that will give you the market cap. So share price alone will give you nothing. It's just the price of the individual stock or individual unit of a company. That's all it gives you, not the overall value of the company. So anyway, looking at the market cap of all these companies, Afterpay is valued at 28 billion, which is about 9 times larger than the next largest company, which is Zip, which is 3.2 billion. Sezzle 1.4 billion, which is that's probably the most interesting company for me. I'll get into that in a second. Splitit is at 570, Humm at 480, which is Flexigroup still, and right down the bottom, Laybuy 260 million, which they just recently IPO'd on the ASX about 2 or 3 months ago, so fairly new on the ASX. So quite a few offerings there, 7 companies, and you got for the large cap 28 billion to 260 million. So that's 100 times difference between the top to the bottom. So now let's look at the financial comparisons excluding Humm between these companies. So what I've done here is I've looked at the quarter one numbers in sales, customers, and merchants, and I've compared the quarter one numbers to the Q4 numbers last quarter, so that's quarter-on-quarter growth. And then I've also compared it to the previous year's Q1 numbers, so looking at year-on-year growth. And so some takeaways from this is when you look at sort of growth and the price of sales, so I've also got the price of sales, which is comparing the price or the market cap to the sales. So all you have to do is divide the market cap by the sales, you get a price to sales. So sort of the way to look at that is, each dollar of sale is worth $7 to Afterpay. Each dollar of sale is worth $3 to Zip. And same thing with price per customer and price per merchant in our customer and merchant section. It's just sort of pricing what each customer is worth to the company. So Afterpay each customer, so if you are a customer of Afterpay, you are valued at $2,500. That's what you are valued at. And merchant, if you're a merchant, you're only valued at $439. So you're worth less to Afterpay than the customer is worth. Anyway, so some of the takeaways from this is a few things here. So Afterpay and Splitit tend to be the most expensive, relatively speaking, and Zip and Laybuy tend to be the cheapest, relatively speaking, which is a surprise to me. I thought Zip might have been worth more. Now, when you're looking at these numbers, I'm just looking at the numbers. I'm not taking into account other factors. For example, Zip did an acquisition of QuadPay, which is their buy now pay later offering in the US. So I think the QuadPay numbers have some effect on these, especially the quarter-on-quarter growth. And I think you can see that definitely in the customers. Zip customers went from 2.1 million customers to 4.5 million customers quarter-on-quarter, which is 114% growth. I think that has something to do with QuadPay. If I am mistaken, leave a comment, but I think that's why we're seeing significant customer growth in Zip. Probably the one thing I've noticed here is Sezzle has really good sales growth, 361% year-on-year growth and even 69% quarter-on-quarter growth. But when you get to the customer and merchant growth, I think they all look pretty good to me, fairly high, even quarter-on-quarter growth there. We're just seeing a bit of a slowdown in the sales growth in the quarter-on-quarter growth in most of the companies, and that's just suggesting maybe there is a bit of a slowdown in the previous quarter. So now I'm just going to go through each company and just look at some factors I'm interested in each company. So for instance, with Afterpay, the main thing I'm interested with Afterpay is UK growth. And UK seems to be a running theme through all these companies. I think there's a lot of competition in the UK, and there is this thinking that UK is where the growth is going to be over the next year or so. The main thing we can see here is, I think, Australia, New Zealand, we're starting to see a bit of a slowdown in growth here. So Afterpay, unfortunately, only did a year-on-year growth. It didn't do a quarter-on-quarter growth, so I had to get those numbers for myself. It's one thing I didn't like about Afterpay's quarterly update is they just compared year-on-year. I really like to see quarter-on-quarter growth, and all the other companies gave that. I think it's one thing I don't like about Afterpay. I've noticed they are starting to manipulate the numbers to give out a better look to the market and to their customers or their shareholders. Anyway. The main thing I'm looking here is UK. So substantial growth in UK, and it's on a low base, but still substantial growth when you're seeing our customers going from 300,000 to 1.2 million and merchants going from 200,000 to 1.9 thousand. So 0.2 thousand to 1.9 thousand. Yeah. Anyway, we are seeing substantial growth in UK and pretty good growth in United States also, and we are starting to see a bit of a slowdown. So year-on-year growth in customers in Australia and New Zealand only went from 3 to 3.4 million, only 15% growth in customers in Australia and New Zealand. I think what we're seeing here is those who were getting into the buy now, pay later sector in Australia and New Zealand have already got into it, and we're going to see that slow down, or continually slow down over the next few years. Zip, seeing very similar numbers, not numbers, but sort of similar growth profile to Afterpay, where the growth is still in the United States. And when Zip released their quarterly update, you can see they did what Afterpay didn't do. They looked at year-on-year growth and quarter-on-quarter growth. And I think when the market saw that 3% quarter-on-quarter growth in revenue in Australia and New Zealand, they just went, only 3% quarter-on-quarter growth in revenue. They didn't like that. And I think the share price did go down a bit. But we're still seeing 12% growth in merchants and 10% growth in customers quarter on quarter. And transaction volume, only 9% growth there. So just like Afterpay, we are starting to see a slowdown in Australia, New Zealand, and USA is where the growth is. So I think that acquisition of QuadPay was a very good acquisition because it gave them that growth profile in the United States. And I think if they didn't have QuadPay, I think the share price would have really hurt with this sort of quarterly update. Sezzle. So Sezzle has an interesting thing where they're doing a soft launch in India. Now, I'm not a big expert in the potential of buy now, pay later in India. Not even an expert in any financial stuff in India. So I'm not even sure what the penetration of credit cards is, whether buy now, pay later could be a success. It's a totally different sort of market. So yeah, so I'm really going to be interested to see how they do in India because potentially there is potential there, massive population base. So I just want to see how they do well because they are growing still quite quickly in the United States where the main business is. So this is probably one of the reasons why Sezzle is probably the company I'm most interested in to see how they do in the future, just based off how they're doing in the United States now and the potential of how they're going to do in India because, as I say at the top there, they are possibly going to be the only BNPL option in India. For a while anyway. So let's get to Humm. So they didn't do a quarter update, but so this is the year-on-year numbers. So this is going back to their financial year 20 numbers. So the growth here in customers, merchants, and transaction volume, 37%, 10%, and 18%. You don't have to know anything. You just know those numbers are much lower than the other companies. So one thing they do have is they have operations in Ireland, and those operations are increasing quite quickly, but on much lower base than the Australian operations. So even though they are growing quickly, because it's a much lower base, those numbers are going to be much highly or more diluted compared to Australian numbers, just because it's on a much lower base. So what I've done next is I've actually included the Humm numbers. So I've just manipulated the times here. So it's not looking at the same time periods. What I've done is I've looked at ex-Humm, those numbers are looking at quarter one financial year 21 to quarter one financial year 20. Humm is looking at financial year 21 end period to financial year 20 end period. So it's just 1 quarter displacement here between Humm and the other companies. But the main thing I wanted to show you here is how much lower growth there is in Humm in sales, customers, and merchants. So in sales, it's 17%, and all the other companies are almost above 100% growth year on year. And customers, 40% in customers, and all the other companies are 100% growth. And even in merchants, it's only 10% when all the other companies are above at least 35%, and some of the companies are over 100%. So we can see this in the share price of Flexigroup. The share price in Flexigroup hasn't done much, and I think this is the reason why we're not seeing the same growth profile in Humm as we are seeing in the other companies. Now let's get to Openpay. Now they've focusing mostly on the UK, and that's where they're getting the most growth. You can see that when you look at quarter 4 financial year 20 to quarter 1 financial year 21, growth in active customers in UK went from 109,000 to 149,000, and the growth in number of active customers overall went from 319 to 372. So only a growth overall of 53,000, and the growth in UK was 40,000. So most of their growth right now looks to be happening in UK, and it seems like that is a common theme here, where UK is where a lot of the companies are going to be focusing on for the next few years, because that's where they see the potential for the most growth. And we can see that with Laybuy too. And in fact, Laybuy actually mentions that in one of their statements here. They actually mention Laybuy believes the buy now, pay later segment is at an early stage in UK versus Australia and New Zealand, with significant potential for growth. So they're focusing mostly on UK, just like we are seeing with Afterpay. We're seeing significant growth in ClearPay, and Openpay and Laybuy too are focusing on UK. So I think there is potential once we see UK take off. Maybe there is that potential for any of these companies to succeed in UK. They can expand their business into Europe, and maybe that's sort of the plan moving forward, is get entrenched in UK, then expand into Europe, and then go from there. So it's going to be interesting to see who wins or who has the best growth in UK. At this stage, ClearPay has significant growth, but Laybuy and Openpay have pretty good growth as well. So that's all I've got on the Buy Now, Pay Later financial updates. If you have any questions about this video, leave it in the comment sections below. Otherwise, for disclosure purposes, I am not a financial advisor. So if you do need any sort of wisdom from a financial advisor, anyone who's qualified, make sure you seek out someone who has their accreditation. I don't have any accreditation. So this is just doing these videos for educational, entertainment, and research purposes. Otherwise, get your financial advice from an expert. That's all for today's video. Have a good day. Talk to you later. Bye.